Welcome aboard the safest airline in Africa. With industry-leading safety measures to protect your well-being. The first in Africa to earn a diamond standard of safety. Offering a more contactless, safe, and seamless experience. Delivered with a smile by Africa's first fully vaccinated crew. Creating special memories that bring the joy back to flying, so you can continue making memories with your loved ones. Book your flight with Rwandair today. Rwandair, the safest airline in Africa. Rwandair.
Thank you. It's a good question. So let me just put a little bit in context on my understanding and what we should look at as a startup. So if you imagine an infant, a 2-month-old baby, would you feed that child what we had for lunch today? You wouldn't, right? There is a particular meal you're going to take that young person through until they're ready to consume what we eat as adults. Unfortunately, our banks are trying to feed us adult food to startups. And as long as you have that, you're going to have infant mortality, right? So we're wondering why companies are dying when they're young. Yes, they will die, right? They will definitely die because we got the wrong food. And the unfortunate thing for our bankers, and I rely on bankers a lot, but you see, the adult population is dying out. The younger population is coming, and you're not paying attention to it. You're putting so many rules in play, and the point is you're not actually putting any effort to change those rules. I love innovation, and I have a rule I tell my people that there are 2 rules that I cannot change. And those rules are in the Holy Quran and the Holy Bible. Every other rule is changeable. But you talk to a banker today, we can't do that. Regulation. Where is collateral? In Uganda, we have less than 1 million land titles. But you look at the fintechs from Uganda that have made it globally. You just look at those and let them tell you the potential of what we have in this country. But not only the potential we have in this country, the potential we have in the region. I am a passionate person on young innovation because we have plenty of that. But we are strangling them every day by regulation. A young person today cannot open a bank account until they have a physical national ID card, right? And then we tell them financial literacy. What are we doing? I think I tend to think that we're sitting here smoking on Kool-Aid, right? Because we're not doing anything for the future young people of this continent. We're relying on rules that are so archaic in such a crazy, changing new world that it frustrates me personally. It frustrates me because we're actually killing our future relying on rules. Right? So any startup trying to get a loan from the bank, I would tell them that they're committing suicide. You're walking down, Eric said it, startups are crazy, wonderful ideas that take somebody who understands risk. Right? Now, understanding risk means that, okay, let's walk with you step by step. How is it going? Let's be with you. Yes, we see how much money you need, but how about we work with you and really take you down that journey? And banks can do that. I like what Richard talked about, friends, fools, and families. Unfortunately, all of those 3 in this market have no money. Yeah? The friends are broke, the fools are broke, and family is broke. Right? So how are we going to make any move for startups? We really, as an entity, need to really face this and stop really sitting around here and talking to ourselves. Let's talk to those young people out there and actually understand what they need, right? And then we can actually make an impactful change. Let me not go on because I might annoy people. I am passionate, but we really need to do something different from what we're doing. Otherwise, we're just smoking on Kool-Aid. Sorry, thank you.
I just wanted you to just add on this and in like 1 minute. What do you think, government, banks, including regulators, can do to ease this or to make this much better for these startups? Like you say, these have very good ideas, but we are like freezing them and burying them before they even start. So when you look at, when you say what you have said, mm-hmm. What do you think can be done that we can learn from here and say maybe we can advise government, we can advise the regulator, we can advise banks on how to also come out besides fintech to help the startups grow?
The biggest thing we all do, probably as Ugandans and as Africans, is we give our responsibility up away and excuse it to government. MTN was not an innovation of government. Mobile money wasn't an innovation of government. It was a private sector innovation. Yeah. But when we don't want to touch something sensitive, we leave it for government. Guess what? With all due respect, the most intelligent people are not working in government. The most passionate people about the country are working for government, right? The patriotic people are in government. The intelligent people are actually in private sector trying to make something out of life, right? So let's understand that. And I think His Excellency has mentioned that before, right? So it's not something new. So yes, we are the ones responsible for that change, but because we don't want to do it, we push it to government. We shouldn't. It is our responsibility.
Thank you very much for that clarification. Yes, please, Eric. Just a minute.
Yes, I just wanted to add one thing to what my colleague Badru said. But I've known Badru for 20 years. We built a business here many years ago. If there's one thing government would do is just stay out of the way. Then the innovators, like you said, can innovate and create the solutions. So.
She's asking you how.
So, well, the devil is always in the detail. So I think one way is, create that enabling investment for people who want to innovate. For example, another innovation that is coming on the world today is cryptocurrencies, right? Which helps somehow to deal with, hyperinflation, etc. I think African governments need to allow that innovation to materialize, as opposed to saying, no, you can't do it. Shut them down. So that's what I mean by stay out of the way. The other thing to do is create an enabling environment. I'll give you some practical examples. You can give startups the first 3 years tax break. So the first 3 years, if you keep your records, you do your financials, you file them, you will not pay taxes. So you start creating that discipline that my colleague Bennett was talking about. Right? So there's ways that government can create instruments. For example, you can say if you start, by the 3rd year, you should have a board so that we can see corporate governance. And if you do that, you get a little tax break. Now, the government will say, well, if you give all those tax breaks, then where do we get money from? What you're doing is that you are deferring that income to later on. Because the reality is that, as my colleagues have said, if you don't create that base for innovation to create companies that become SMEs and become big companies, you are stifling your future. The reality is that many years from now, you don't have any companies. So you as a government need to be thinking about creating a cycle that allows companies, yes, a lot of them will fail, but a few have to succeed and become big enough. So think about it. How do we think about the next MTN, the next Flutter Wave, the next company that could succeed? How could we make that come out of Uganda, right? So then you create a process, because it's short, medium, and long term. And we can go into the details, but I hope you kind of get the idea.
Thank you so much for that. I think we've run really out of time. I'm going to give each one of you, I think, 1 minute just to summarize on what do you think we can take out of this particular topic. But what I picked right from Dr. Kwaku's to what you have discussed here is I think for startups and SMEs, we need to make the rules much easier for them and not be so adamant and measure a startup and SME like a corporate company, what you'd like to see in a corporate company. That's what I take from the discussions that we have had. And also, I think, again, from the presentation, I think still it was Professor Kwaku's, is we have forgotten that customer value is very important. We, as banks mainly, we actually create products for customers and we expect them to be taken by them without any consultation or feeling for them, is this the kind of product that is going to work for their small companies? It goes across the board, like you have the same thing that happens to a corporate should happen to a startup and everything in the middle. That's what I pick from the discussions today. So I'll start with you, Patricia. What's your take or conclusion or advice you would want to give the audience?
We take, for Mr. Ntege, we take positively the feedback. But I would just like to say, yes, the future is really bright, like the panelists have discussed. And where we sit as banks, what we are looking forward to is sandbox. I'll try to defend the regulator for once, the central bank. They've set up a sandbox. So you can try to test your innovations there and see what is our future as a country. And I believe it's just the starting point. If I go back to what I pick is data is paramount. And whichever way we go from Rocky, Telecom, what I've had, data is important. So we need to be innovative rather than think of, security in form of land. Like you said, we do not have the security. Let's look at data. How can we actually bring out the innovation, the credit scoring, and just look at the SMEs as any other client who would like to grow? And can we support them in that difficult environment and walk the journey with them? But like I said, maybe it will be through their sales, their banking, and we shouldn't just focus on the collateral. Then key for me, I think also is about the, if I may call it, the open banking solution, working between fintechs and telcos. This means that we should be able to share the information, walk the journeys with them, and whatever information one partner needs, let me say fintech, regulator, ourselves, this will actually help us develop. And then finally, our regulators, of course, like you said, it's a journey. We are walking, we are discussing with them. And I think it has started with the NIRA BOU integration, just to make sure we are getting to understand the startups and the SMEs. So from where we sit, and also what I see after has presented to us, like Kwaku said, I'll use EcoBank as an example to just close. Where we are as EcoBank, we have a regional solution. So we are trying to make sure we can link all the SMEs. And I believe with time, this will move towards East Africa. If you go to the West African countries in EcoBank, because of one regulator, they are able to actually tailor-make their solutions, transfer money, the exchange rates are working fine. But when you say cross-border now to come to other regions of Africa, that is where the problem is. But like we've had, the discussions have started, and I want to believe that if all this is taken into consideration, the sky is the limit, and we'll develop the SMEs and startups, because 40% of the GDPs we depend on SMEs. So we cannot do without SMEs and startups. In one way or another, we have to find a way to fund them and actually grow the economy, because they actually sustain the economy. Thank you so much.
1 minute, please, because we have some questions.
Okay, thank you. So from our side, we think the macros on Uganda are looking very good. The devil is in the micros. We've done 2 investments now. We hope to do more investments, but we see very interesting entrepreneurs that are in the tech space here that we think that we would like to back.
I think my final remarks are around collaboration, because we shouldn't throw the ball to one side and say financial institutions are killing us. We need to look at how do we collaborate, how do we work together. Each one of us must play their part. The SMEs must play their part. The financial institutions must play their part. The telecos, the venture capital funds, the private investors must play their part. And we shouldn't look at each other as competitors. We must look at ourselves as partners. So what the telecos are not able to do, the banks should be able to do. Where the banks cannot do, the venture capitalists and the equity firms should be able to come in. So it's really about collaboration, it's about partnerships. Thank you.
Thank you very much. This has been a very good discussion, and I think the whole group here and the other discussions that have been taking place have really been enlightening to me personally. I'd maybe want to leave with one thing. We had a discussion over lunch about the Shared Values Initiative, and I think even here what I'm hearing from a lot of people, the truth is small companies, SMEs, like you said, they're the ones that employ people. Yeah. They're the ones that let people pay school fees, they're the ones that let people pay rent, they're the ones that enable the whole economy to move. So it's self-defeating to stifle the SME sector as a country and as a continent. We should actually look at ways of growing the SME sector to a point where we don't need outsiders to come in and do things we can do for ourselves. And maybe lastly, on the issue of government, we always hear about government incentives for people coming from outside into Africa. It would be nice to hear about government incentives, like Eric mentioned, for Africans doing business in Africa. We should also be incentivized to do the same. Thank you.
Thank you. I think we all know that the bottom of the pyramid is where life is. Yeah. And we should actually focus on really understanding that bottom and being able, because that's where the future companies are coming from. And especially now with this whole transformation and complete disruption, the future companies are the ones at the bottom of the pyramid. And some of those people didn't even go to school, but they have amazing ideas. How do we re-engineer our solutions to be able to meet and serve those people? That's my takeaway. Thank you.
Thank you for all the panelists. My takeaway is we need to encourage knowledge share. We need to encourage people who are venturing into doing business to get knowledge, find knowledge, read up, and do things the right way from the beginning. If you have a startup, like he said, if you're an infant, you need a nanny. Get the right nanny. Don't get a mechanic to raise a baby. Get a nanny to teach you how to, do the things a baby does. And I think that's where we need to be as startups and entrepreneurs. Thank you.
Thank you, Richard. Nana?
Yes, thank you very much. And for me, very quickly, I just want to say that contrary to what most people think, banks love SMEs because that's where sustainability comes from. But we cannot run away from the fact that there's a lot, the failure rate is very high in SMEs because of some of the mindsets. So I think the first recommendation for myself is that we focus in terms of our academy and development of SMEs on the mindset. So that right from the very beginning, certain sort of disciplines are built. I mean, if I take an example of MTN, for example, working in Ghana, it took them maybe 10, 15 years before they became the success that they've become through a lot of hard work. And so we just need to encourage our SMEs that the ideas are brilliant, and there's some hard work that is required to make it up. And I think my colleague from EcoBank touched on the valuable use of data. They say banks ask a lot of questions, but what I found out is the fintechs and the telcos who are doing similar models ask even more questions. The difference between us is that they use technology and the data to get the questions rather than asking the customer directly. And so the effective use of technology and data provides the same answers, but with the convenience to the customer. So that's what we banks are having to learn. How do we also use that same data and use the algorithms that are required to get the information we need without necessarily badgering the customer to provide that information? We have fintechs who are even doing as much as doing stock management for people who are selling in shops and can produce reports at a click of a button. So you don't need to worry the shop owner to actually do books physically for you. So the future lies within that collaboration between ourselves so that we can use the data that is already at our fingertips to solve the problems and be able to provide better sort of solutions that fit the customer. And finally, banks have the segments that they are good at, which has been mentioned. The fintechs and the telcos also have a segment they are good at. If we focus on collaborating, we will be able to work together. So while the telco does salary loans for its clients, we finance the mortgages or we finance the car loans. There are many fintechs and telcos who borrow from the banks to on-lend to some of these sort of customers. And so those are the opportunities that we're beginning to sort of see to unearth. And Africa Trade offers significant opportunities for SMEs. And we see ourselves as banks, as partners, to be able to unlock the opportunities that the Africa Trade is offering and offer it to some of the SMEs in there. So for SMEs, the future is bright. We just have to approach it in a very systematic way to ensure success for all.
Thank you very much, Nana. Thank you very much, all panelists that are here. I think we've taken over an hour and something, but this is a very sensitive topic which touches everybody, right from my grandmother in the village to whoever, maybe to the president. So it is a topic which we could have talked about and come out with even good solutions, given that if we had the time that we're given more than just 1 hour. So I would like to open it up if there are any questions. I don't know where is she?
Thanks, moderator. My name is Charles Odongtho. You asked Ntege a question on what he thinks should be the solution. And I was wondering, you are mostly bankers there. How about starting to think about easing the interest rates? The interest rates in this part of the world is one of those reasons killing all our businesses, the young businesses. 23%, 25% have been told Ghana. And so my friend talking virtually cannot say that we are friends of SMEs. You're giving them interest rates of 25%. That is crazy. Compare it to the Chinese, the Indians that we are told are now chasing all of us out of business. They're giving their business people at 3%. Is there a conspiracy, you know, the capitalist conspiracy that banks must never discuss or present a policy change? Part of the issues we are talking about is that change mindset. It's not only from the young people. The mindset, the shift must be also from the side of the capitalists, because if we are talking of collaboration, then you have to also change. The change should not be one-sided. That's what I think. I don't know what you bankers think. Thank you.
Thank you. Is it the same question? Different from what he has. Can I first read a similar question that has come through like you've asked? Kaduyu Abdallah has asked, to our dear bankers, do you have anything to say in regard to your lending interest rates, especially considering the fact that banks can offer interest rates as low as 2% and are thriving? I hope lending interest rates from the central bank is not a pretext. So the same question.
Thank you. My name is James Kiwanuka. And this is directed to our good host, Dr. Emmanuel. Since money is one of the key enablers in this discussion that we are having, when I look on the panel here, especially as far as Uganda is concerned, the bankers are very, very poorly represented. We would like to know if it is possible, next session, next time we have a summit like this, even if it's at the expense of everyone absent, being away from the table, since we want effect from these conferences, let us have a panel of bankers and we say all these things to them. Because as we have spoken now, it's only EcoBank and Housing Finance who know about this. Let's have bankers seated all there, and even if it's from here to there, and we tell them these truths. Thank you, sir.
First, where there's somebody there.
Just a quick intervention. The focus of this summit is not just for Uganda. This is continental, and that's why we've made a combination of fintech, capital venture capitalism, banks, and all of that. But each of the panel discussions, 5 of them, we're going to take them one by one and drill down. So they're not going to go scot-free. The bankers are going to come back. They're going to go scot-free. Thank you.
Thank you, Emmanuel.
Thank you, Madam Moderator. I am beginning to ask myself a few fundamental questions, which I want to pass over to you. So, the banks told us that they can't give us cheaper rates because the money is unavailable. Someone asked the question, is the cash available? So we have our 15 to 20% from the banks. Now the fintechs have found the money and they're charging us between 15 and 20%. We who are part of investment clubs have found the money and we are also lending at 15 to 20%. So, question we put together, what are our colleagues in Europe doing right at 2% that we cannot do back home? And I want to correlate that with this utter discussion that we always have, excuses over excuses. The education system, colonial system. Everything is not our problem. Can we please start to solve our problems? And we want to ask a question. What can we do to lower those interest rates? Thank you.
Can we first talk, just a minute, can we first give, is it on interest rates also? No. Can we first answer this interest rate thing? It is quite hot, and I don't think you are the only ones who have talked about it. I think even the president has talked about it. Everyone has talked about it. I wish the governor or deputy governor was here to also explain that. But I'll give it to Peace as a banker to try and explain why are your interest rates very high.
You would handle that question given that you've been in banking for over 37 years. But anyway, I'll give it a shot. I know that interest rates continue to be a dicey subject or matter. And I like what this gentleman asked You know, everyone is talking about high interest rates, how interest rates. What do we do? Now, when you look at interest rates, the way we determine interest rates, first of all, we look at the cost of the funds, the cost of the money. Ladies and gentlemen, remember that commercial banks do not have money. We are simply intermediaries. We get money from this gentleman, and then we lend it to this lady. Now, this gentleman will want a return on that money that he has given to the bank. And then we are lending it to her. And then remember that deposits we hold are not permanent. So you deposit money today, but after 1 month, you want to come back and withdraw the money. So what does that mean? It means that the banks many times have to borrow in order to lend. Now, I'll give you an example. Like, we've been negotiating with one of the long-term funders outside. They are from outside Uganda. Now, because the money must come in shillings, they have to incur costs of hedging because they have money in euros. Now, for it to come here in Uganda, we have to get it at about 11%. That is the money, that is the interest rate Housing Finance Bank is going to pay to the lender. Now, if we get the money at 11%, ladies and gentlemen, ask me, at what rate is the bank going to give it to you? Because there are other things that we have to add. We have to add operational costs. We have to add the margin for the bank. We have to add the risk element. So, ladies and gentlemen, I would like to say that we can resolve this challenge, one, by saving. The saving culture in Uganda, and someone said, what are other countries or developed economies doing? Look at their saving rate. They save, they have a lot of money. They don't have anywhere to put it. And that's why they look for markets like Uganda, like Africa, where they can invest and get a better return. So it's really about savings. We must increase our savings, and also we have to pay back the money, because the higher the risk, the higher, of course, the cost of funds. So there are so many factors that come into play when it comes to interest rates. Thank you. I hope I have explained.
I can ask Patricia to add on that before we take the next one.
Hope I'm audible enough. Just to add on what Pieces said, we also have to factor in that 3 or 4 years back,
sorry, and if I may. Hello? Yeah, sorry. So if I may, I just wanted to, I agree wholeheartedly with what has been said. I think that the two factors I wanted to add as well, the difference between Europe and Africa is that in terms of the demand for the money that we are able to gather, more often our governments also sometimes are borrowing from the local markets as well. So that also increases the level of pressure on the funds that are being used to borrow. And so as governments mature and become more and more efficient, their requirement to borrow from the domestic market reduces. And when that happens, there's much more supply. And therefore the rates naturally sort of go down. I mean, if you ask yourself, in countries where you have 20 banks, etc., how come no other bank or one bank has not decided that I'll undercut and make more business? Because the funds that are available always come at a cost, as the earlier sort of speaker has said. The other way in which we can use to reduce rates, which most banks are sort of trying to use technology to do, is if we improve the level of detail we have for the customers who are borrowing, it starts to reduce the risk. And therefore, when it starts to reduce the risk, you can then reduce the amount of margins that you are putting on as a risk premium. And once we get better at that, it then allows us to come down a little bit in terms of the rate. And that's why there's a huge focus now on trying to use technology and data to actually get to understand the customers a bit more deeply, so that the risk premiums that are applied sort of go down. But the risk premiums are just one of many other factors that are going down. As our economies improve, the rates also start to improve. Thanks.
Enough for that. Patricia, did you want to add anything before we take the next question? Okay. Sir, you had a question?
Yes. My name is Emmanuel Chinonda. I'm from Malawi. Basically, it's a very exciting, question which has been posed regarding money, because everybody focuses on money. My simple, humble question is, I want to find out, because, Africa is growing, people are growing up, people are looking at things, we are focusing on changing mindsets. Have the bank thought about funding ideas? I'm mindful of people coming out of college who are graduating, and these people, they have got very bright ideas, which can actually attract a lot of money, but they lack funding. Have you thought about it? And if so, what can we do to make sure that we assist such type of people? I rest my case.
Eric, can you answer that question? Finding ideas. Here.
Thanks for the question. I think that financing ideas, as we said, is not the domain of the banks. So you need to go to sort of early stage funders, your family of friends, VCs, etc. And I think that is happening, but a lot more needs to happen. Thank you.
And Madam, in addition to that, I think what a new trend that we bankers are beginning to do is actually partnering with some of these other sources of funding. So in in a number of banks, you see the banks are now having things like business incubators, and they are doing the SME academies that was talked about earlier. Typically, what we will do is to find someone who has long-term funds and partner with them, take some of these people coming out of college who have brilliant ideas, take them through the ideas and actually try and train them in terms of how we think they can build a sustainable business. And then while the partner who has the long-term funds the idea, we also start to fund the working capital needs. But this is sort of done in collaboration while we are offering a lot of development for these college graduates who have come out of it. And in recent times, we can point to a number of businesses that have been spawned in that particular way, which has been successful. But as has been said earlier, that it's not as much as we should. And the idea is we need to do some more in terms of the collaboration. But as a concept, it's been proven and it is working that when the banks collaborate with the long-term fund holders, the sustainability of these businesses are much higher. Thank you.
Thank you, Nana, for that addition. I think we've come to the end of our session. I'd like to thank the keynote speaker, Richard, the panelists who have been here for all your input that you have put in. Thank you very much, and I hope this will help. And like we have been promised, we'll have another session as bankers. I know it is something that people would like to do. So Emmanuel, please try and set up for us a session. Thank you very much, and have a blessed day.
By Nation is your go-to website for exclusive content with in-depth stories, analysis, and detailed coverage. Sign up with these quick and easy steps. Visit www.monitor.co.ug. Sign up for free for a limited period of time with either Facebook or Google. Or you can enter your email address, password, followed by your phone number. Click Sign Up. You are now a registered user. Your privacy will be protected when you share information with us. This registration is part of our effort to understand our audiences and make better business decisions to serve you better. For any queries, please contact us on 0312 301 230 or email us at customercareug@ug.nationmedia.com. Monitor, powered by Nation. Terms and conditions apply.
Welcome to Nobel.
Internet is not only important, but is part of us now. We use it in our studies, at work, home, and while going about our daily errands. However, an inconsistent internet connection is common and can be frustrating. But the good news is, we are here to the rescue. At Rock Telecom, we strive to promote integrity, dependability, innovation, customer service, and open-mindedness. Visit our website www.rocktelecom.co.ug for more information. Rock Telecom. Rock Telecom is licensed by the Uganda Communications Commission.
Welcome aboard the safest airline in Africa. With industry-leading safety measures to protect your well-being. The first in Africa to earn a diamond standard of safety. Offering a more contactless, safe, and seamless experience. Delivered with a smile by Africa's first fully vaccinated crew. Creating special memories that bring the joy back to flying, so you can continue making memories with your loved ones. Book your flight with Rwandair today. Rwandair, the safest airline in Africa.
Rwandair, fly the dream of Africa.
So we pick travelers, our typical customers are people flying in and out of the country. So we pick those from the airport to wherever they're going and back. And we do this through a network of driver partners for whom we give regular business and improve livelihoods. They can book through WhatsApp, they can call us, they can email us. You know, we just try to make it as simple and convenient, as seamless as possible for our customers.
What is creating shared value all about? CSV is short for Creating Shared Value. It is a powerful business management concept that can promote companies to think differently about their approach to social and environmental issues. It is a strategy for addressing society's challenges through profitable business models. It's all about policies and practices that enhance the competitiveness of companies while improving social and environmental conditions in the regions in which they operate. CSV is not CSR. Creating shared value goes beyond philanthropy or corporate social responsibility. Shared value is not about personal values.